Hi everyone, welcome to the stock market update. Well, obviously a massive week for tech stocks and the market as a whole. So really important update I've got for you over here. These are the valuations, and as you can see, well, Meta after its sharp falls looks undervalued because it's in green. Energy stocks still there, banks still there, nothing changed really much on that side. Suggests to me there might be an overreaction potentially on the Meta side of things. This has been the performance during the week. Obviously Meta got whacked, but pretty much everything else has been going up. Eli Lilly, and I'll come to that in a second, up. Obviously the banking stocks, the energy stocks, those which show they're undervalued, have been rising, which is what you'd want and expect. Another measure of valuation is price earnings growth ratio, the share price relative to profitability, and or the growth in profitability. And you can see energy standing out. Financials no longer standing out on that. So energy is pretty much the only one. Meta to some extent standing out, some of the semiconductor stocks. Let's look at those individual stocks, shall we? And what we see with the S&P 500 is this. We are rising, but we're rising in a downward channel. So I don't have a problem with anticipating this going up a bit more, certainly given where the technical indicators are. They're oversold. In other words, they're at the lower half. That's the stochastic, weekly and monthly. That's the weekly MACD, and it's still falling on the monthly, and that's why don't be surprised if you get a few days of rises because of this being oversold, but overall falling back down again. So that's where we are with that one. Where are we with Apple, for instance? Well, they did rather well. They've bumped up just as we've said in the past. If I draw that one in for you, this is where the price of Apple is. Now, we've drawn these channels there for obvious reasons. It's been trading along those channels since 2020, and I said best case it could go up there. It's a 53% return. Worst case it would stay along this lower channel. You might want to pause and print this out and then say, right, is it doing this? And that'll give you a good idea in terms of how it might progress, and to make sure it stays above this lower channel. Now, of course, it can do this, it can do this, it might go there, it might go back down there. We don't know that yet, but certainly one that I'm happy to be holding. Microsoft, we're going to talk about investments rather than trading, and because we're talking about investing, I continue holding it. It's been one of my, what I say, quality picks. In other words, even if the world goes to hell in a handcart, I'm going to be fine with it. And again, like the S&P 500, because it's in it and moves it, it is moving in a downward channel, and there's some still space for it to go down there. And you might say, well, wait a minute, why are you holding on to it when it just looks like it's going to fall? Well, it's one of my forever stocks, so it doesn't really bother me, these smaller term moves on that one. What have we got next? Well, after that we've got Amazon. Now, this has been happening to other stocks, and I'm a little bit surprised that it's fallen below this channel. We did say before that it could, but I didn't think it likely. And you can see the monthly MACD. You can see these. You can see these now starting to point lower. Really, it's now back to where it was in 2018. I think that's an overreaction. Whilst it's below this lower channel, I do not think it can go much further lower. And I wouldn't be surprised if you start seeing buying. Now, where would that get us then? Well, if it goes back into this channel, you'd be looking at still a 24% return from current levels. May well, in a year, still get a 75% return from current levels. So let's wait and see what happens. But certainly we'll have more confidence if the price goes back above this channel. All right, that's when we'll have more confidence. So let's wait and see what happens over the coming week, and next week you'll see my update. Meta has gone below, again, what I thought it would. We're looking at a support level that's held pretty much since, 2016, really, 2017. 2016, it's now gone beneath this. It's here. That means it's dropped. What is that crazy amount down there? Okay, so it's gone from 374 to 100, it's dropped 66 odd %. Of course, if it were in the next 2 years to get back to its all-time highs, and now you're looking at 289% return from where it is. Again, I'm holding on to this for now in any, well, not just for now, but as I said I would, despite those sharp falls. Didn't anticipate such big falls, although we have said we were expecting fall because of this and this and this. The monthly MACD is the most important part, and ever since that fall really there, it signaled it. But like I said, I'm not trading my investments, so we kept hold of it, and it's there for a long period of time. Costco, wonderful, thank you very much. It's staying in that upward channel that's been in place for years and doing nicely, and those are the projections, and it's far easier to trade that one. PayPal's another one which has fallen a lot further than I would have expected, oversold according to, every single one of these Bs is a bank saying buy. Every single one of them. Okay, it's an analyst at a bank saying buy. So sooner or later I expect we'll get back to some kind of sense of normality on that one. Johnson & Johnson, well, you see the three projections there. Worst case, base case, best case, fine. We've been doing the updates on this since it was down here, so those are good returns. That's from today what you'd get. So that's a good one. Katera, similar thing, upward channel, no problems, there we are. And if it stays along there, those are the kinds of returns you're looking at. Halliburton, similar story. Now this is what I meant about things falling beneath the channel, potentially making you think, oh my God, that's it. It's going lower and lower. And in fact, then just reversing and coming back in. And Halliburton's a classic example of that. And I think Meta's probably going to do a similar kind of thing, but we'll have to wait and see. It's certainly not guaranteed, and I certainly wouldn't buy more Meta today. Let's put it that way. I would not buy more Meta today. I'll just wait with whatever holdings I've got. So that's where we are on that one. And it's worked out well. Marathon Oil, the energy stocks, all of those from the start of this year have been doing well. Occidental, been holding, and you can see what we've projected, where it is. It's sort of ahead of the run rate. It's a bit like cricket. There's a target run rate that you forecast, let's say this, and if you're ahead of it, then you're ahead of it. Okay, Devon Energy, similar kind of story. You see it, lovely. Good that we have those energy stocks made up for all those tech stocks. So there we go. I'm not worried about my tech stocks. I mean, Microsoft, Apple, Amazon, not worried about those at all. Those are meant for many years, and therefore I'm not concerned. Adobe I've put on here because it's a bit of a bellwether in terms of what does a quality company, which still looks good, what happens when it can actually drop far more than you anticipate. And it's also a lesson in using the MACD, and you can see what's happened. It's trying to make up again, but it's still falling, so I suspect this won't last and it'll come back. I think it's poor, it's good value, therefore is it going to be at 274 you want to get in rather than 318? It's about making a deal. Imagine you're bidding for this company, you're Elon Musk, and you're thinking, well, I'm not going to pay you 318. I think I can pick you up at 274. So it's a bit of a wait and watch, really. Eli Lilly, similar to the other ones. You can see why within the channels it just looks attractive, doesn't it? Okay. This has been a killer trade. You've followed me on Telegram. You've seen that it's just been ridiculous, the amount of money that's been made on this one. And still, obviously, less and less now, because the closer we get to, 119, there'll be less to be made. But still, that return has been phenomenal. Thank you very much, Sterling. I'm still holding Sterling and still doing that. That's not to do with the Great Investments Program. It's just trading. United Health Group, you can see it there. That's the projections. You can see the channel. You can see what we're expecting. Don't want it to go below or stay below that line. The risk is it's overbought, and this could fall. If that falls and the price goes below there, then we'll have to reevaluate. APA, you can see it again. It's a good number, and it's playing ball. Whilst it's been falling, it's still on the right trajectory. Now this could still fall and still be an upward stock, because it could do that, and that's what's important to understand. I've got a load more slides coming up, but before I do that, let me just remind you: don't forget, sign up for that if you haven't already. Lots of free resources and education. Now, let's go to this. Retail investor portfolio is down 44% year to date. That's the average, according to the Financial Times. That's pretty bad, 44%. That's presumably if you've got a lot of tech, but no energy. The energy stuff should have dampened those falls. And if you got out of tech, then it certainly did. But like I said, I'm still holding my Microsoft. There's no point in me measuring Microsoft return this year when actually I'm looking at a window of 5 years for that one. And as you all know, I have very few stocks that I hold beyond 12 months, and Microsoft, Apple, Amazon, they're in there. Alphabet, they're in there. So I don't have a problem with that. Survival rates of pension funds. Now, this is interesting. You know there's been a pension crisis. The number of funds which are still around after 15 years is under 50%. This is why I think it's important you do your own thing, because these funds that you're giving your money, retirement money to in some cases, they're not around for very long. Well, that's great. Amazon's wild plunge after a lackluster sales outlook set to erase $240 billion. So what's the most companies have lost, and when have they lost it? Well, Meta lost $251 billion on February the 3rd, 2022. Amazon lost $240 billion. Can you imagine losing that much in just a day, October 28th, and so on. That's pretty bad. I think they've not updated Meta when this was taken yet. So that's pretty bad. I mean, there was a time when Apple lost $139 billion back in 2020. Having said that, it made it all up and then some. Apple had lost $150 billion in May 2022. Apple had lost $154 billion in September. Apple had lost $157. If you just looked at those figures, you think, oh my God, it must be near collapse. Yet it's right near all-time highs. Microsoft had lost $178 billion in March 2020. Yet it's gone on to make all-time highs. Apple again, $180 billion, September the 3rd, 2020. It went on to make all-time highs. Amazon, $206 billion back then, and then another $240 billion. So whilst they lose it, they often make it back. So I'm not worried about these companies. I mean, Tesla I'm not going to talk about because it's too volatile. I don't care. Thank you all very much. Don't forget to like, subscribe, depending on where you're looking at this, and the link's in the bio, depending on, as I say, whether you're looking on this YouTube, on Telegram, on my LinkedIn, Facebook, wherever you are. Thank you very much.